Hi there, keen traders. It is the beginning of the holiday season in the USD. Officially, Thanksgiving, Black Friday on Friday, and then we have, of course, Christmas on the 25th, and then New Year's. We could probably see trading a little bit more muted, but I would have to say that last year on Black Friday, there were actually pretty big moves in the Euro and Great Britain. Across the board, I actually knew a trader that was actually a very big trader that had considerable losses that day, thinking he was just going to take the holidays off and leave major positions on. So what we're going to do is take a look at what we have going into the weekend, and the fib trades, there's really nothing to look at. Everything just continued to move up, and we didn't have any pullback. The fibs trades have been kind of disappointing for the last month or so. I guess this month they're up about 367. I think 367. Actually, they're 29 pips yesterday. Let's say about 400 pips. And the month before, they were actually negative. So it is what it is until we get a little bit more volatility and trending in the markets, which we actually are having a big trend in the Aussie, but the Great Britain is confusing it with the and that's why we're not getting the pull downs that we need to jump into the trades. It is what it is, but we'll also look at the setups, or actually let's start off by looking at that stacker trade move in the Euro USD, and it's disappointing stuff. The Euro USD, you can see we had this move to start the month off. That was nice. We just weren't in it because we weren't doing the trades at that moment. I think that finished up 180 pips, and now we're officially down 100. Actually, down 83 pips on the setup, and the setup was pure. I mean, it was nice. We had the push down lower. We broke this ascending trend line right here, and then we pushed higher above that 135.80 level, which was our entry point because we had a break of this range, looking for another push down lower. And now we just broke higher, and it looks like it was definitely just a stop run on a slow trading week where they just went up and they got us. And we'll have to pay attention. But now, I mean, what do we do? And do we jump into another trade short the second we break here? No. What we need a total break of this 134 level to probably even be interested in getting back in this trade, or maybe even more realistic, this 133.64. We'll have to play it by ear, but it's definitely not a place to add on for a break higher, because we don't have, unless we have a close that's much higher, we don't have the setup for it. So that's the thing with these stagger trades. You can sit sidelined for months. I mean, in all reality, this trade closed above the 50 fib, and that is a definite indication of reversal at that point. So we could have just remained sidelined this entire time, looking for a push higher, and our first entry point would have been right there, and it actually would have been rejected. So this trade would be the pure setup no matter what. So we just basically need a break of this area and a sustained break of the 135.80 level to be interested in this trade in the short term for a push higher, or we need a break, to be honest, of at least probably this 134.67 level, because we could very well be just getting ourselves set up for a chop zone, just like the Great Britain USD has been in forever. And then this pair hasn't shown enough momentum to shoot up above this area either. We can see that the cross has pushed into the zone, but we haven't had the momentum to push higher. New Zealand sitting right here at this with a break of this resistance zone between 82 and 81.60. Everybody in the world is looking at this head and shoulders. A close below this level, 81.22, would mostly be a confirmation. And then, you know what, I'm going to tell you right here and now, we're probably not going to close below that. We'll bounce back up, and we'll probably close right around the 0.8140 level. That's just my assumption at the moment. And so it'll be a clouded picture, and we'll probably bounce back up to the 81.60 or the middle of this range while people decide what they're going to do. The USD JPY, now this has been the mover. We've had a clear break of this 101.50 level, and that has brought the pairs that we're interested in, the Great Britain JPY higher and the Euro JPY higher. These guys just want to continue to push up in their ranges, and now the real level we're going to watch is this 138.75, and I didn't just pull this out of thin air. This is the 2010 resistance zone, and you can see it bounced 2009. It bounced on this level 3 times before pushing down lower, and I would say it's a fair guess that it's some significant Fibonacci level of that move, which isn't really going to have anything to do with the trade at this moment. But about the 50 fib, does it have anything of this entire move? I guess it's somewhere around this 0.68 fib, but that's way too much. All right, so what we're going to be watching here is just this, watching to see if we get support at this 138.75 level, and it could be a good chance for us to see it push back down lower. In the Great Britain JPY just making new highs, new multi-year highs every time it pushes higher. Great Britain odd, continue to push, but the one I'm interested in is the Great Britain New Zealand, because now it's right back at the top of its range. Between, as I've said, the pair is ranging in a larger range, and after breaking out of that congestion zone, the pair is breaking in a larger range between the 2 level and the 0.58 fib at 188.97, and you can see we've made this trip, round trip, now twice, and so we'll have to see what happens up here, and I'm going to bet that we might get a little bit of consolidation here and then a push back down lower, because the Oz is probably a little bit tired after this pretty much straight down move, after breaking the bottom of that ascending that triangle at 92.35. So we'll keep our eyes on that. And the Swiss franc, hey, look, it's reversing. The Swiss franc is very similar to the, obviously, basically the inverse of the Euro USD, and we'll have to see what we get there. I mean, it's maybe by Friday we'll have a little bit more clarity in these positions. But the problem with the stagger trades is you can go quite a long time without really getting into anything. But all in all, the stacker trades for the month actually would have worked pretty well, because I think this was positive 185. This move here, and then we had the push here, which was minus 80. So it would have been a plus 105. And the Swiss franc, it's similar setups where I think this move was relatively profitable on the downturn. I don't know the numbers off the top of my head. You know what? Let's look them up. And so you could see that move down lower would have. We'll get the numbers for the. I like to keep charts on just about everything. That's how I fill my day. You can see that in the Swiss franc, you can see for the November would have been plus 94, then minus 50, so about 40 pips on that, let's say. And then the euro, you would have had a 185, so about 102 pips, so it would have been 140 pips. And Great Britain just sidelined the entire time. So what we have here is basically just joining in, and when you just join in, sometimes you don't get in at the perfect locations. Not even putting out any 50 fib trades today and tomorrow, I guess basically for the rest of the week, because I'm going to be away from my desk. Friday, though, I will be watching for any clear setups during at least probably the European and the New York Open. And I will, if I jump into any trades, I'll definitely let you guys know. All right, everybody, happy holidays for anybody in the U.S., and probably experience slow trading everywhere else. All right, have a good one, and I'll talk to you soon.